There is a particular kind of morning that every trader has lived through. You wake up, you check the screen, and the news is exactly what you wanted it to be. That was this morning. Micron reported after yesterday's close, and the number wasn't just good, it was staggering. By sunrise, the stock was up 17%. Overnight, the memory names in Asia ran so hard that South Korea actually had to pause its own market to cool it down. The whole AI trade, the one everyone had been writing death warrant for weeks, came roaring back to life. And so somewhere out there this morning, a new trader is sitting in front of the screen, feeling something that feels like a gift, but is actually a trap. Certainty. They know they're right. The news is good. The chips are flying. The plan is simple. Buy the strength, ride the gap. This is the easy one, and that is exactly where today's lessons begin. Because the market spent the next 6.5 hours teaching one quiet, expensive truth. Good news is not the same thing as a good trade. So let me show you what actually happened. The open was everything the bulls wanted. SMH gapped up, triple Q gapped up for about half an hour. Every green candle confirmed the story everyone already believed. And then, slowly, the tape started to disagree. It didn't crash. There was no headline, no shock. It was much subtle than that. The mega cap names that have carried this market for 2 years, they just started to bleed. Apple rolled over, Microsoft rolled over, not on bad earnings, on something stranger. This is the part worth slowing down for because it's the whole day in one idea. The reason Micron is exploding is that memory prices are soaring. AI needs an almost unimaginable amount of memory, and Micron sells it, so a shortage is a windfall for them. But memory is not a windfall for everyone. Memory is a cost. It's a part inside a MacBook. It's a part inside an iPad. It's a part inside an Xbox. So today, Apple announced it was raising prices on the MacBook and the iPad. And then Microsoft announced it was raising prices on the Xbox. And both of them pointed at the same thing, the rising cost of memory. Sit that for a second. The exact same force that sent Micron up 17% is the force that sent Apple down more than 6 and Microsoft down more than 3. One company's blowout is another company's margin problem. The market is not a list of separate stocks, it is one connected machine. And today, it showed you the wiring. Now, here's where it gets interesting, and here's where most people misread the day. If you only looked at triple Q, you would think it was an ugly session. It closed red the fourth day in a row. It couldn't hold green close. SPY finished basically flat, but underneath that flat, tired surface, the money wasn't leaving, it was moving. Because while the giant tech names bled, the chip outside of Apple and Microsoft actually held up. AMD closed green. The broader semis under SMH leaned higher on Micron's read. And then further out in the corners of the market, nobody films YouTube videos about the industrial names, the healthcare names, the financials. That's where the green was. Small caps under IWM actually closed up on the day. So this wasn't risk off. This was a rotation. The money didn't walk out of the building. It just changed rooms. And that distinction is everything. Because a trader who saw triple Q red fourth day down and got short, the whole market was fighting a tape that was underneath perfectly healthy. They had the headline, they just didn't have the trade. So why couldn't the great Micron simply lift everything? Why the ceiling? Because there was a second story today, and it was quieter and it mattered more. This morning we got the Fed's favorite inflation number, the PCE report, and it ran hot. Inflation broke above 4% for the first time, the highest reading in months. And this is landing on a Fed that, under its new chair, is not talking about cutting rates. It's leaning toward raising them. The 2-year yield is sitting up near a 52-week high as we speak. That is the lid on the pot. That is why on a day with euphoric chip earnings, the broad tape under SPY couldn't catch fire. You can have the best single stock news of the quarter and a hot inflation print with a hawkish Fed will still sit on the whole market like a hand on a spring. That is the thing I want you to take from today more than any price. The market is not a casino where good news pays out and bad news takes your chips. It's a weighing machine, and it's weighing 100 things at once. Today, it weighed Micron's brilliance against Apple's cost, against rotation, against an inflation number that wasn't going away, and it came out almost exactly flat. The new trader saw one input this morning and felt certain the market was holding something else. Which brings us back to where we started and to the only real edge any of us have: patience. The trader who got hurt today is the one who chased the open, who bought the very top of that morning. The trader who did fine is the one who waited, the one who let the dust settle in that first window. Because by 10 o'clock, the story had already changed. The gap was fading. The rotation was showing itself. The market had stopped reacting to the headline and started telling you the truth. The headline is free. Everyone gets it at the same time. The read, what the tape does with that headline in the first hour, that's the part you actually get paid for. And it almost never matches the headline.